Welcome to Markets in a Minute. My name is Austin Duke. I'm financial advisor and chief investment officer for Diamondback Financial Services. We are an investment advisory firm focused on clients who recognize the need for solid investment advice, who don't want to invest on their own, but still want to be educated through the process. This is the Monday, November 10th, 2025 edition. Let's get started. All right, we'll start by looking at the stock market as measured by the S&P 500. This is an index of the 500 largest companies in America. Stocks will go up and down on a daily basis for a variety of reasons, and our job is to figure out what moves we've seen, why we've seen them, and where we think we're going from here. So as a frame of reference, this little orangish, yellowish line here in the middle of the screen is where we finished the 2-week period. So 2 weeks ago, that's the level we were, right about 6,800. So Monday morning, we gapped up, had a pretty significant increase to start that week. Federal Reserve meeting on that Wednesday is really kind of the apex of the rally that we had been experiencing, and we've been in pretty much a decline ever since. But we ended the 2-week period only down 0.93%. That brings our year-to-date gain up to 14.4%. And really, the rally we had here at the end of the day on Friday had a lot to do with some rumors about a potential deal to get our government reopened, which ended up not materializing. But at least we had a little bit of a glimmer of hope there for a short period of time. Next, we'll move on to looking at interest rates. These are rates that are measured by the bonds issued through the U.S. Treasury Department. We feel interest rates are the preeminent measure of investment risk. They're factored into every investment valuation calculation. So generally speaking, if interest rates are going down, stock prices are going up. And if interest rates are going up, stock prices will come down, et cetera. So we like to take a look and see what interest rates are doing to kind of give us an idea of whether or not movements in the stock market can be explained by just the interest rates, or if it gives us an idea of where we think we might be going. So we have interest rate listed over here on the left-hand side, and we've got maturity lengths here on the bottom axis. So each of these circles, each of these dots represents an interest rate for a given maturity length. So from 1 month all the way out to 30 years. And we saw over the last 2 weeks that these short-term rates came down, right, as expected. Federal Reserve cut interest rates, and so these short-term rates are most affected by what the Federal Reserve is doing. And we saw those rates come down, but we had what we would consider a yield curve normalization process that restarted, where we're starting to see these medium-term and longer-term rates moving higher, shorter-term rates moving lower. So investment theory suggests that the longer you invest your money, the more you should be compensated for your time. So a normal yield curve would suggest we've got interest rates here and maturity of 1 year or less that should be lower than the interest rate for 2 years, 5 years, 10 years, 30 years, et cetera. So we've been in this upside down or inverted yield curve for the past 3 years, ever since the Federal Reserve raised interest rates after the COVID pandemic. So at some point, we anticipate this will finalize and we'll finally have a normal yield curve again, which should, again, help to normalize everything in the economy and in our stock markets, et cetera. So, yeah. All right, moving on to our recent developments as well as our expectations and implications portion. I wanted to take a step back. So this is a chart of the stock market ever since the end of September, right? So the government shutdown has persisted since September 30th, October 1st, however you want to measure it. And really, we're pretty flat for the last 6 weeks. We've kind of fluctuated around, right? This is when President Trump was arguing with China about whether or not they were actually going to come to a trade agreement. So we had a sharp decline there. And then everything got better. He was making the world tour, meeting with world leaders, making trade deals. Everything was looking pretty good. And then we had the Federal Reserve meeting here this last week or 2 weeks, and they cut interest rates, but then they made it very clear that they had no preset course. That the December meeting was not a lock, and the futures market was anticipating another interest rate cut in December, and they wanted to make it clear that that wasn't a guarantee. So We had a market decline off of that news. We also had some larger investors come out in public on television and basically say that they are anticipating that we're going to have a decline in the stock market, or that there are certain technology stocks that they feel very strongly are going to decline. And we struggle with those types of investors and those types of segments on these financial news shows because they have already made investments to capitalize, to profit from a decline in these investments. And then they go on TV and they give their case as to why they think it's going to go down and hope that it all happens in their favor. So people tend to panic when they get these types of individuals on TV, and it's just, I think it's an unfair way to invest. And anyway, so but until we get a resolution to the government shutdown, we would not be surprised for the stock market to continue to fluctuate the way that it has been around these levels. Um, it is now the longest shutdown on history. We're already seeing that flights are being canceled and there's delays at airports, and there's Americans not receiving their welfare benefits. And we know that these can become larger problems than they already are. And we really don't want to get to that point. And I cannot envision a scenario where the government allows this to persist into the holiday travel season. So, as much as I hate for, to think about that being the reason why we have to come to a decision and an agreement and get the government reopen, we're anticipating that the government will figure something out here in the next 2 weeks so that things can ramp back up leading into the holiday season. I think there's going to be enough people complaining that they'll finally get something done. What else? Just that these people are going on TV and they're saying, yeah, we think there's going to be a 10% decline in the stock market. It's like, well, yeah, that's basically saying that that water is wet. Because for those who have been with us for a while, been watching these videos, reading our newsletters, right, we see three declines of 5% or more 3 times a year. And we'll see a 10% decline once every 12 months and a 20% decline every 3 years. So for them to come on and say, yeah, we think over the next 12 to 24 months, we're going to have a 10% decline. Like, well, yes, we would expect that. So that's not new information. Why are you coming out and saying that? Unless, of course, you're trying to get that to happen right now because you want to profit off that position. But anyway, so our expectation, again, government shutdown should be coming to a close here in the next couple of weeks, and that we expect the Federal Reserve will cut rates and at their December meeting, but that's still more than a month away. There's still government spending, right? Fiscal stimulus that's coming in 2026. We know the Trump administration is working on deregulation for a lot of industries, which should be expansionary. We anticipate inflation and interest rates will be higher in 2026 as a result of all this. We think the stock market will continue to rise, but we just had an off-year election where it feels like the news is making sure that everybody knows that the Democrats are winning elections, and we feel like there are probably going to be a lot of Republicans nervous about midterm elections next year. And so we think that there's going to be a big push to get the economy right-sized, make sure the government's open, make sure everything's funded, make sure everybody's happy, because it tends to be the economy and how people are feeling about the economy and their jobs and job security, et cetera, that will drive political results. So uh, Republicans need to figure out their stuff, or else they're going to lose the elections that are coming up next year. And we'll see how that goes. But yeah, in the meantime, we think that there will be a lot of positive tailwinds for the markets heading into next year. As a final word, I recently watched the movie Apollo 13. Some of you may have been alive when that actually happened. That was before my time, but I've seen the movie, which, who knows how accurate it is, but there's a scene in that movie where they need to burn the thrusters to get the right speed and trajectory to and re-enter the Earth's atmosphere. And they probably, again, Hollywood probably made it more dramatic than it really was, but they turn on the thrusters and Jim Lovell's like, I got to keep the Earth in this window, and as long as I can do that, then I'll know that we're on the right trajectory, et cetera. So, they turn on the thrusters and everything goes crazy, and they're trying to figure out like how, where'd the Earth go and blah blah blah, and yeah, and everybody's listening to it on the radio, which again, I don't know if that actually happened, but by the time they were done burning the thrusters, they had got it right back in the window, and everything was fine, and they were right on the trajectory. So um, we kind of are thinking that might end up happening when the government finally reopens and we get all the economic data that we've been waiting for. There could be some volatility. There could be some people screaming and trying to figure out like where do we actually want to be going, or where's the economy going, and whether or not we're right on the right trajectory, or how we need to be repositioning our investments to get back, to re-enter the atmosphere, or to make sure we're on track. So that's what we're going to be watching for, assuming that we're right, and assuming the government does reopen. We do start getting some economic data. We're going to be ready to act on anything that we need to adjust. So we appreciate your willingness to continue working with us. We hope you have a great November as it starts to cool off a little bit, and we get ready for the holiday season. And again, just appreciate all you guys and hope you have a good week, and we'll see you soon.